to welcome everyone to this month's leadership call, and it's being hosted by Fabiola this month. And I want to give a little bit of a background on her. She started in the banking industry at just 18 years old, and you can tell she's maybe been in it for about a year and a half now. I- but I want you to know that today she's actually a VP in business banking as an officer at Nevada State Bank. And she has traveled from Texas, California, and now she's in Nevada, and she is a wealth of information. But to know Fabiola is to really be in her presence is quite a privilege. Not only is she just a beautiful soul on top of how smart she is, but she is really a woman's woman, and she wants to help you succeed, and she builds people up like you would never even begin to believe. So I am thrilled that I get to call her my friend and have her share her insight and her wisdom with you here today. So Fabiola, I'm going to hand it off to you.
Thank you. Thank you, Summer. This is so exciting, so awesome. I've been a member of LeTip since April. And thanks to Summer, I actually started my own chapter here in Las Vegas, and it's been so amazing. I'm the president of the 215 West chapter. And as of last week, we officially have, I believe it's 23 members. So we're growing. We have so many amazing things happening in our chapter, and I'm just excited to see what we do. So my role currently is at Nevada State Bank. I'm a business banker, and I'm so passionate about this topic just because so many people, go to not just financial advisors, but bankers and business bankers for advice. And I feel like sometimes you feel like a number when you go into a place and you talk to someone that uh, is an order taker, right? And that's what we call it in the industry is order takers. You just do what you're asked, right? And so one of the things that I really wanted to talk about today, because there are so many small businesses, not just here in Las Vegas, but all over the US. And I feel like that's what makes our world go round, right? Our economy, and that's how we contribute back to society is through our small business. I just wanted to talk about the alternative financing options, not just the conventional and the SBA, but just in general, what options there are for everyone out there and every business owner that you guys can take advantage of, and kind of how to manage that during all of the things that are happening in the economy with like inflation, the interest rates, all of those things, right? And so I really wanted to talk about that just because it's important and people are very scared of it, right? When you think lending, you think, oh my gosh, I don't want to get into debt. I'm getting into debt if I get any type of loan, credit card, right? And that's really not the mindset that a business owner should have. Anytime that you are getting a loan or getting a credit card or a line of credit, it's actually to help you scale, grow, expand, and use your business in a way that you are not depleting your own money, your own funds, right? Depending on the industry you're in, whether it's real estate, construction, marketing, you have equipment, things like that. There are so many ways to take advantage of all of those things that could be really beneficial for the growth of your business. So my goal really, anytime I talk to somebody, is to get them out of the mindset of getting a loan is to get into debt, and getting a loan is to grow and help your business so you can make more money and you can be better, right? It's an investment in yourself and your business. So that's kind of like why I do what I do, because I get so excited about it. So if I ramble, please just tell me to shut up. So
You're doing great.
I've been doing this for almost 20 years. I've actually worked in pretty much every single realm of the bank. I've been a teller, I've been a banker, I've been an assistant manager, operations, branch manager, and now business banking, right? And so I'm understanding of all of the things that go into that. So one of the things that we really have been talking about lately in the past few years with rising interest rates is all of the options for lending. And people are finding, man, I can't qualify for this, or man, the bank doesn't want to give me money. And it's really, I mean, yes and no. It all depends, right? And so I'm going to preface it with saying you want to prepare anytime you're thinking about going to get a loan. You want to make sure that you're prepared, like on the personal side. anytime somebody pulls your credit, which you can actually pull a credit report once a year for free from any of the three credit bureaus. So actually, you have three choices of what credit report you want from each of the credit bureaus, which is TransUnion, Equifax, and Experian. And you can pull those at the different times of the year to help you look and make sure if there's any discrepancies. But one of the things that I say is you want to prepare for lending when you don't really need it, because it's going to set the path and determine what that process is going to look like by the time that you're going to be able to use those funds, because it's going to be a process, right? So you want to make sure that you are working with your bookkeeper or your CPA. You want to make sure that you're checking your credit. You want to make sure that you haven't completely maxed out your credit cards yet. The reason I say that is because whenever someone pulls your business credit for a loan, they're going to check your personal credit. And this is where sometimes people get a little bit confused. People are like, well, I don't want this to show on my personal credit. The business loan will not show on your personal credit report, but any institution that's a financial institution will check your personal credit, because in a way that is a reflection of how you're going to, treat your business credit. So they want to make sure that, if you've had a recent bankruptcy, they want to know what happened. If you've had some derogatories, what happened? Late payments, what happened? Was there, a situation? So it's better to be honest and upfront about things that may pop up, that when that happens. I have had cases where people don't know they have a medical collection, and they could be small. One of them was like $150. So it's very just always check and make sure that you can go and like dispute those, and they will take them off, and it will help. So just checking those things if you're thinking about doing that, because it will impact the outcome of what you're doing. So with that, a few options depending on how long you've been in business. If you're a newer business owner, let's say you've been in business for less than 2 years, the options for financing, there's really only two. There's either SBA, which is the Small Business Administration, or there's alternative financing, which is it can be investors, it could be, for example, you guys can do lending through merchant services like Clover. They do like what is it called, Capital Cash or something like that. So there's other options. Usually banks will not do conventional lending if you are less than 2 years old. And if they do, it's for a small amount. So, for example, Nevada State Bank, if you're less than 2 years old, we can do a line of credit for up to like $15,000. And then we can do a credit card for about $15,000. It's not like the best, but it's something to get the business started because it's considered a startup. And so usually the two options for if your business is less than 2 years old is going to be SBA. That's going to be your best bet. The reason why is because, and this is where people don't understand kind of what SBA is it's backed by the government, meaning they guarantee up to 85% of the loan. What that means is if something happens to your business and, for example, the hurricanes that just happened in North Carolina, if you started a business and you got a loan and now your business is destroyed, let's say, and you're having trouble making those payments. So for the bank not to lose that money, the Small Business Administration will guarantee up to 85% of those funds, right? So it will kind of help mitigate those losses. I mean, you're still going to be responsible for paying what you can. And they do have, whenever there's a what is it called, a natural disaster, the relief and stuff like that, that you can go through that process. But that was just kind of an example of what that means as far as the SBA and the percentage that they cover to protect the banks too. So a few of the benefits of getting an SBA loan, I'm going to give you some pros and cons, because when I first started in business banking, I was like, SBA sounds like a pain in the butt. And I'm not going to lie, it can be. They will ask for your firstborn and your blood type and everything to make sure that, like they want that we're good. And my boss kind of put this in a really good perspective for me when we were doing some lending. I have a client currently, we're in the process of doing a startup and it's for almost $1 million. And the underwriter would come back with like 30 questions, and we would be going, it's a back and forth of like 4 or 5 times, 30 questions, 20, 10, 5, right? And I would get frustrated and I would say, why are they going so hard into these clients? What they have a great business plan, they have great projections, they all have business owners, they have equity in their homes, they have, all of these things. They have their injection, which we call like the down payment is an injection of 10%. And he was like, well, Fabiola, if you as a person were lending somebody $1 million, wouldn't you want to ask them all of these questions to make sure that you were going to get your money back? And I was like, man, I would. And I would probably even ask more, right? Just because I want to make sure that, yeah, that my funds are going to come back to me. So that's kind of how I see it. So if you're ever in the process or have been in the process, just try to put yourself in that situation where, man, if you guys were lending that amount of money or any type of money to anybody, what questions would you ask to make sure that you get a return on your investment, right? So one of the benefits of the SBA lending is sometimes they do have lower interest rates, but my favorite is they have a longer repayment term. There's a few SBA products depending on what you're using it for. So the most popular one is called an SBA 7A. And a 7A is usually anytime your business is expanding, it's a startup, or you want to do some type of projection based project. So, what does that mean? So, SBA, you don't have to be a startup to use it. You could actually be in any process of your life cycle, but it's specifically for businesses that are 2 years or less that want lending. So let's say you've been in business for 5 years, which I have a client currently that is in that process, and he's expanding and he needs to buy equipment. He needs to buy, he's actually moving into a new location. And so what they do is we get projections for the next 2 years as how much this loan would generate in the next 2 years and how much money he could earn based on this, right? So my favorite for this one, it's a term loan, which means it's you get the money up front, you provide invoices if you have any, and it's a 10-year term. And the better part about it is there's no prepayment penalty. You can pay it off whenever you want. There are SBA fees depending on the amount of the loan. So anything over $1 million, your fees will be a little bit astronomical. So just be prepared. Anything less than $1 million, the fees are more manageable. But the government obviously does want to collect its portion because that's how they are able to lend and give that the guarantee of that percentage of the loan, right? So Another SBA is a 504. I would say the 7A and the 504 are the two most popular SBA loans. The 504 is specifically to purchase commercial real estate. You can also purchase commercial real estate with the 7A, but the fees will be more depending on the amounts. The 504 is specifically for commercial real estate property. And it's, again, anything over $1 million with the fees. But it's interesting because they actually divide the loan in two. So the bank will cover 50%, the SBA will do 40, and then 10% is the down payment that the client would have to come with. So anytime you do an SBA, if somebody tells you there is no injection or down payment, it's very rare that will happen. The reason why is because the minimum requirement for any type of lending with the SBA is at least 10%. And that actually depends on your experience in the business, how long you've been in business, and your overall, your business plan and projections. And a lot of the time I've had people say, well, somebody told me that I don't need a down payment or an injection for this, and they want to borrow $500,000. How banks look at it, and I've worked at least five now including Nevada State Bank. I have 5 different credit unions and large financial institutions. They want to know that you have skin in the game, that you are serious about your business, that you're ready to start putting in money. And if you have already, let's say you've already spent 50 grand on your business and you're wanting to get a loan, you can actually provide those statements and that information to your lender, and they can count that towards an injection. Sometimes, again, depending on experience and everything, the underwriter may ask for 15, 20, 25%, also depending on the risk, right, of the business. Usually, bars, restaurants, that industry is very high risk. I mean, 90% of them go out of business in less than 3 years. So they're very, very risky to lend to. So just keep that in mind. I will say financial institutions, and I'm not trying to like leave out businesses, but they love to lend to like construction. They love to any business that has equipment. They love it because they use that all as like collateral, right? Other businesses too can be like marketing expenses, and also I would say real estate brokerages are great because they're always having those events, and they, can use them as marketing dollars. A lot of the time, business owners will purchase their car with their business if they use it a lot. So real estate people, also construction and people in that industry, marketing, things like that. I actually had a cigar lounge purchase like a luxury vehicle for their business. And we were able to do that because they would actually take clients out for a tour of Las Vegas when they would come visit their cigar shop here in Las Vegas, which was pretty cool. So just like different things for that. The cons of SBA is you do have to come prepared. So you do need a business plan, you need projections. It will require at least 3 years of personal tax returns. And if you've been in business longer than 2 years, 3 years of business tax returns. And it can be a lengthy process. The reason is because, again, they want to make sure they're getting all of your information and that you are actually prepared to pay back this loan that you're about to get, even if it's a 10-year term, right? I would say it's a little bit tedious. It can take a little bit time. Conventional lending, we could probably get you an approval pretty quick versus SBA is a little bit longer. Right now, I submitted for the startup I'm working on, that's about $1 million. I submitted their application in July, and we're still working on it. We haven't, we got like kind of a decline, but not really. We're actually mitigating the decline so we can get an approval. And we're probably doing a little more than we should. We're going like above and beyond. But I will say, if you find a really good, if you guys are friends with your bankers or you have a local bank that you work with, like please make friends with them because they will totally fight for you and they will totally have your back. They will try to figure out the best ways to solve those problems, and potentially they can figure out a way of like, hey, this may be a decline, but maybe we can try a different strategy or maybe there's different options. So just keep an open mind. Sometimes a decline is not a no, it's just a no for the moment. Please take the advice that you get from your banker or your business banker or your CPA. Please take that advice. And I guarantee you, if you just give it 3 to 6 months of working on those things and you try again, the likelihood of you getting an approval is way higher than as if you were like, man, I was declined. What do I do
What
now?
is
Right.
happening?
I love it.
Fabiola, thank
So,
you so much for taking the time to share
yes,
your expertise with
of
us. It was a great
course.
presentation.
Thank you
You
guys
are,
for
as it's
having
been said a
me.
few times, truly that breath of fresh air and that resource that we know that we can absolutely go to. And you're
Awesome.
not going to have to worry about the runaround. She's going to give you good, honest feedback.
Yeah,
So
I
thank you
will.
so much for this. We really appreciate it. Everyone, have a wonderful rest of your week. And thanks so much for attending today. Bye bye.
Thanks, guys. Bye.